The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 24th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do everything we can to have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go take a look at the circumstances that the bulls and the bears, the buyers and the sellers are throwing out to you and I. We'll go make heads or tails out of it. I'm absolutely grateful for your presence here. I'm here to serve you. Absolutely here to serve you. So feel free to pick up that phone, dial on at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 113 points. She's trading at 17,618. S&P down 14 points, trading at 2,088. NASDAQ Composite off 25 points, trading at 5121. Russell 2000 is down 11 points. That's trading at 1233. Gold is back $9 at the moment. Silver's down 20 pennies. Light sweet crude is off 70 cents. Amazon leading the charge, the upside up $66. To the downside, you've got Biogen off $77. That's down 20%. So we'll take a look at those stocks and others as well, if you would like. We did not get that close that you and I were looking for inside the S&P 500 yesterday. The number was 2104.75. I believe that was the number that I gave to you in the actual close yesterday. Where was it? Here, we can find out here. It was close, but it was no cigar out there, and you had to have a cigar. It was at 2102.15, and hence we've got the result that we are taking a look at on the daily chart here for the S&P 500. We can see that price has broken through the 0.382 retracement, and that says that 2077.94 is potentially in store for the S&P 500. But let's go to our first caller. Let's go all the way out to California to our man Garo. Garo, thanks for calling. Thanks for holding. How are you today?
Thank you, sir. How about you?
I'm doing very well. Very well. How was your morning jog?
Very good.
Good. Very good. Very good. You called about the SEO, which is the ultra short for oil. Are you in that trade? Tell me how I can help.
Yes, sir. Yes, sir. Now it's a few weeks that I'm in this trade.
Wait. Our listeners, there's something wrong with their machine. You don't stay in trades for very long.
No, I trade every day. Every day, for example.
Okay. So you've been trading this for the last couple of weeks.
Yes, sir. For example, today I bought it at $84.01. That was the entry point for me. And then I sold it at $85.10. So I'm out of it now. I'm out of it because at R1 it showed me that there's a resistance. I got out, and now it's going over that price. But still, I don't care. I made my money already until tomorrow. Tomorrow we'll talk about that differently.
Okay, good. I thought that all of a sudden you would totally change your trading strategy and you were holding things for longer periods of time.
No, sir, I never do that. I'll keep the longest that I wait is about a few hours, and that's about it. Yeah, I get my money, I get out of it, and that's about it until tomorrow.
Perfect. Okay. All right. So for Sunday's trading or for Monday's trading, how can I help you? What is it that you're looking at out here in SEO?
On on SEO, when I look at the, let me bring that one more time, just one moment. SEO, when I look at my own charts that I have from a different institution,
yes,
it shows $87.20 for R2 and $89.90 for R3. And that's where it stops. Do you think it will get to that point, or you have a different number?
Well, again, if in taking a look at SEO, the way that I would have to get an idea for where price would head to would be to first focus in on what's going on inside of light sweet crude, because that being the underlying instrument, which is trading down at 47.82. And let me just pull this back here. No, I'm looking at the current contract, the active contract, which is the September contract. So that's what SEO should be trading off of as well. So with regard to where this could be headed, and just looking for patterns that would be out here, Garo, what I would be doing is I would probably take a look at a Fibonacci expansion of the low from March 18th to the high out here on May 6th. And that's because we are trading below that March 18th low. So this says to me that the August contract for light sweet crude should trade down to about 45.68. So at 45.68 in light sweet crude, that's where I would take a look at, okay, where are you at in your SEO trade on a intraday basis? But it looks to me that that is where light sweet crude wants to move to. If we take a look at SEO, we're not going to be able to take a look at expansions of those same swing points. So, for example, we're looking again at March 18th. Let me just write this down here on my pad of paper. So we're going from March 18th, which is a swing point low, to a high of May 6th. So I'm going to switch over, and it should be reverse inside the SEO out there, because it is the inverse. And if we take a look at it, March 18th, in essence, should be the high, which it is, but you can see that SEO is nowhere near above that high. So in this case here for SEO, the only thing that I can do from a retracement standpoint, or from a Fibonacci standpoint, is just take a look at retracements. In this case here, it's above 83.64. It got above that, as you know, today. Assuming that it closes above that, what it would suggest is that it ought to get up to about 92.54. Now, are those the is that a resistance area for you? Is that one of the resistance zones?
No, sir.
No.
My first one is 87.20, and then it is 89.90. You see,
so,
we have different numbers.
Yes, well, and I'm using a different, right? So as long you have one set of tools that you're using to help you with regard to some resistance lines. So this is good just to add a second set of eyes to it. The $89 area, now that makes the most logical sense to me, especially inside of SEO, because that is the low of that March 18th swing point. So 89.75 to 92.54 is a target. But in actuality, what you've got to really do is take a look at also, what's going on with the current contract there and what's happening volume-wise. But it does look to me, just based on what you and I looked at for the August contract for light sweet crude, that SEO has more room to run to the upside.
Yes. So the lowest that can go and stop is $45.68.
The lowest on, say that again, please. The lowest on light sweet crude?
Yes.
Well, in the case of light sweet crude, let me go back to that chart out here. Give me a moment to pop that up on the screen.
One.
Yep, that's the first level. That would be the first expansion level. It would be 45.68, and that would seem to be a logical area. If light sweet crude is moving lower with conviction, which either could be volume or volume and a wide-ranging bar, then actually, Garo, the next level would be 40.57. That would be a logical Fibonacci expansion, and you would be looking for price to, get to. So your first stop, 45.68. Your second potential area would be 40.57. At least that's how I would be taking a look at it at the moment.
$40.57.
Correct.
Okay. I didn't have these two numbers.
And now I have no idea what that really is going to end up equate. Let's assume that light sweet crude gets down to that level. I have no idea of being able to equate what that actually means for you inside of the SEO trade.
Absolutely. I understand. I needed all these numbers and information, so I will watch it thoroughly between the UCO and SCO. So
Sure.
according to that, I can decide which way to go and where to stop and what's going to happen next. So,
Perfect.
like that.
Well, we're glad to be your source of,
Yes.
one of your sources of information.
Yes, thank you, sir. I appreciate it. Thank you so
bet.
much.
You bet. Have a great weekend. That was Garo in California, who starts his day the way that most should as well, which is with a 1-hour jog. I believe at about 4 or 5 in the morning. Okay, so now let's go back. They got the Dow's off 125 right now, and let's go to let's start by trying to get an idea of where price is headed to. Let's go take a look at a intraday, a real intraday chart. Let's take a look at our opening range, our 5-minute chart out here. Now, our opening range today, that's that first 30 minutes of trading between 9:30 and 10. We had a high of 2,097, a low of 2,091. We can see that price had broken through this area at about 10:15 this morning, 10:15 to 10:20. Was doing it not exactly with heavy volume, not compared to the first 10 minutes of open. Inside, this is the futures contract, even though I'm referring to the open of the cash market out here. You can see that the top line, the top diagonal line here, this little price channel, is really your marker with regard to any bounces or whether there could be any potential change of trend out here. Now, that's for the day. We'd go take a look at some longer-term charts, as we are going to, in trying to take a step through figuring out where the market may head. May be up against some good support. The top line, I feel pretty comfortable with regard to a resistance area. And the bottom line looks to be pretty solid as well out there. So that's on a 5-minute time frame. That little green line going across my screen out here, that should have been very strong support for the S&P 500 futures contract, the ES Mini. That number was 2,085.50. That was our TAS daily market profile low. That should have held as support. It has not held as support, at least from an intraday standpoint. So now let's go let's go from 5 minutes all the way up to that 2-hour chart that you and I were taking a look at yesterday. And then this 2-hour chart, one of the things that you and I identified was the A to B equals CD pattern, that lightning bolt pattern that was coming off of the high out here from the trading day of July 20th between 2 and 4 o'clock in the afternoon. That was your A point. Your B point on this was all the way down here. We're still using the same B point. That took place between 8 and 10 in the morning on July 22nd. Makes a 47, about a 50% retracement to create that third level. Now, the beautiful thing about the A to B equals CD pattern, if you'd like to learn about it, truly learn about it, and how to master it, I've got a great workshop for that. You can just send me an email, steve@tfnn.com, or get in touch with the folks over at TFNN. They'll get you set up with that. And when we get back from this break, we're going to spend some more time on this A to B equals CD pattern. But the next level for it, just simply with regard to that lightning bolt, says 2,074.92. The 1 to 1.618, A to B equals CD. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 117 right now. And let's go out to Fort Collins, Colorado, to our man, Mark. Mark, thanks for calling. Thanks for holding. How are you doing today?
Good. How are you?
I am doing very well. Thanks so much for asking. What do you have planned for your weekend?
Just staying in. We're getting a little hot here in Colorado, so.
And hot in Colorado is what, in the 70s?
Low 90s.
90s. Now Fort Collins. Is that at what elevation is that at?
We're pretty close to a little over 5,000 feet.
Oh, you are? Okay. Oh, that is pretty warm for being out there. Well, good. So then you're going to be surfing. Well, you won't be surfing out there, but you'll be hunting for trades. I would think they do some hunting out there, and it looks like you're going to be hunting in the energy complex or gold mining. You're going to go looking for some gold out there.
Well, I was looking at both the GDX and the XLE charts. It looks like gold's breaking lower on a weekly with pretty significant volume, at least on the GDX. It's almost as significant as the last low, or close enough to it to make me a little more cautious. Whereas the XLE has broken to a new weekly low on significantly lighter volume, and I'm wondering if you think there's a play there, or if you think there's a play in the GDX as well. Let me know.
So I'll answer the question. Which one do you want to go to first? I'll give you the which one are you looking? Go ahead.
XLE. Let's do that.
XLE. So if we take a look at the XLE, let's look at a couple of things. One, you mentioned the weekly time frame. So we're at the end of Friday. So let's go take a look at it. And, Mark is absolutely right. One of the things that it has done this week, which nobody really wanted to see from an XLE standpoint, at least if you're a bull, from a bear, you most certainly want to see that. And that was the close below the week that began January 12th. And that low was 71.70. The volume there was 199 million shares. Now, this week, you're only at 56 million shares out here. So it is breaking that. That was a hammer candle as well. So you do not have a confirmed A to B equals CD to the downside. All that we have is we are breaking, or the XLE is breaking that swing point with light volume out here. And that's what the weekly chart says. If it says, hey, where else can things run to, right? You break a swing point, you do it with light volume, it really doesn't matter. It says you can go down to the next level. And the next level here inside the XLE, there would really be 3 of them on a weekly basis. November in 2012, and that's somewhere between the 70 and the 67 level. I'd say June of 2012 between 61 and 65, and then eventually October of 2011 between 54 and 62. So that's what the weekly time frames suggest to us. But, there is a wonderful potential pattern inside of the XLE that is something to consider, at least from a bounce standpoint. And that is, at least according to my work, based upon doing some Chapman wave counts to the downside, I've got the XLE in a potential 7th wave move to the downside. Now, it's been in that all week long, as each day it continues to make a lower low out there. So the first time that it doesn't take, if it's on Monday, it doesn't take out that low, then maybe that's a opportunity for you. But of course, inside the XLE, it's really going to be dependent, I would say, on what's going on inside of ExxonMobil, XOM, what's going on inside of Schlumberger, Chevron. ExxonMobil today is completing a 1-to-1 A to B equals CD to the downside mark. That had a price projection of 79.35. Hasn't hit it exactly, but it's gotten down to 79.86. Volume today about 52 million shares so far. I don't know what else could this be trading into. It looks like this is trading into, I have a high volume spike out here, but it's not a wide ranging bar or anything, so I don't really know how to read it. It's really trading into, I'd have to say, back into the June 4th area. You're really playing the counter trend here in the case of ExxonMobil. That was a weekly A to B equals CD as well that it was completing there. In the case of Chevron, so everything that you and I have looked at so far, because of what it's been doing on a weekly basis, it doesn't look good to me. Is there something on the weekly charts that you're looking at that maybe I'm overlooking?
No, I was just, like you said, this would be purely dead cat bounce potential for a couple points and then get out, like a quick option trade. But if it's catching a falling knife, I don't want to get anywhere near it. I just know you saw anything that I didn't. So.
The only thing is, on that daily chart, and I've had one of my eyes on it, just because there's always that potential where you could get that little bounce, that 7th wave to the downside. But can you hold on through the break? We'll go back and take a look at gold and the GDX.
Sure.
Okay, we'll go back to Fort Collins. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 127 right now. S&P's down 16, trading at 2,085. We're going back out to Fort Collins, Colorado, and we're hunting around for some potential trades with Mark. And Mark is specifically asking about the GDX. So the first thing that Mark, that I want to point out to listeners, I know that you're familiar with this, but it's really that correlation between the GDX and gold. On my chart here right now is the top panel of my screen is the continuous contract for gold. The center portion is the actual gold vectors minor ETF, GDX. And the bottom chart is the US dollar index. And we can see that from a directional standpoint, the actual gold miners are going to track really right with what gold is doing. That means that you and I have to first go over and see what gold is doing to determine whether or not there's any trades with inside the GDX. We can see a divergence between what the dollar has been doing. The dollar's been making higher lows, but we haven't seen that same pattern inside gold or the GDX. I would say that the directional correlation is not too bad with regard to the dollar. It's not as far off as maybe many people might think. But there is that divergence out there. So to that extent, that one, and you'd really have to go back and look at other dollar divergences between what it's doing versus gold to say, hey, is that worth paying attention to? Such as was back here in the time frame between March in 2015, right around March, looks like March the 10th and March the 17th, there was a divergence, a little bit of a divergence in the direction of the dollar versus gold out there. So that's the first thing that I wanted to point out to folks. What I would also say, Mark, is that so therefore, you and I have got to take a look at gold. And if we go take a look at a daily chart for gold here, we talked about the energy sector, the XLE, and how I came up with a seventh wave count to the downside. It is much cleaner when we take a look at gold with regard to the wave counts. And what I mean by that is, Mark, I'm taking, and I know you do follow the Chapman wave out there. And if we take a look at that May 18th high, and we just begin doing our counts to the downside from there, you'll see that we are in a seventh wave move to the downside. So if ever there is a potential for gold to at least reverse, we're getting near that time frame. We're getting near it. Are we there today? I don't know. I will say that as of 1:37 in the afternoon, gold is off of its lows, which it pushed those lows with some pretty good volume for a minute or so early this morning. I can't remember. It was like around 4:30 or something like that. But you do have a hammer candle that has formed. Now, you love to see bullish reversal signals occur at the end of any pattern. You know, I would consider a seventh wave move in the Chapman wave the potential of an end of a pattern out there. But I don't know how it's going to close. Yesterday should have been a bullish reversal signal as well. And I tried playing that, and I'm just waiting for, and that failed. That failed by the end of the session out here. So I would say that, you know, if it were me, I think it's at least the signals seem to be better to be looking inside the gold area versus the energy area for trades out there. Now, there's another thing to consider, and that's that gold priced in euros broke through its level of support. That's the bottom portion of my screen out here. And that was at about 1,000 euros. And it broke through that a couple of days ago. If today's lows fail, price is going to go down and at least test that level of support, as well as the bottom of the descending price channel that I have on this continuous contract. And this one's a pretty good one because this has all the contracts stitched together real nicely out here. That gold could, you know, move down and test the bottom of that. So I'm going to start with that as a preface. Are there any questions, you know, that in taking a look at this, that's presented in your mind? And then we'll go take a look at a couple things inside the GDX. Any questions about this so far?
No, that makes a lot of sense. Thanks.
Okay. So then you asked me the question, you know, about taking a look at the GDX. And with the GDX, you know, and I've got basically 30 or 40 different mining equities inside this screen here that's up. And the GDX, you really got to go take a look at the weighting inside that. So you've got Barrick Gold, Agnico Eagle, you've got Gold Corp out there. I wish. Do you know the top five by any chance, just off the top of your head? You might not, but I don't remember them off the top of my head. But I think Barrick Gold's one of them.
I could get them really quick, I think.
Yeah. So if Barrick Gold is one of the top five, you know, it's just absolutely horrible. You know, this is a weekly chart that we've got on our screen, and this has got volume this week. You know, it's got the biggest volume on a weekly basis inside Barrick Gold since the April 2013 level out here. So that's not necessarily a good thing. You know, you'd really have to try to figure out why Barrick Gold might turn around. Go ahead.
I'll give you the top like 5 or 6. So Gold Corp is 7% or more.
Okay.
Newmont Mining is about 6.5%.
So let's look before you give me the other ones. Let's look at the two of those. Let's look at Gold Corp. And if we take a look at Gold Corp, I've got 3 lines going across my screen, and those 3 lines representing key levels of support or swing points. So we know that Gold Corp is below the October 20th, the week that began October 20th, 2008. That was at 1384. There was volume there of 85 million shares. We've only done 74 million shares this week, but nonetheless, you're still down below that. And that's number one weighting inside of the GDX. And in order to play the GDX, you know, you're going to want to see Gold Corp give you some type of buy signal. It looks to me like Gold Corp wants to get down and test what looks like a swing point low from May of 2005. And that low is 1204. That only had, now here we're not going to go pay attention to volumes because it was 8.9 million shares that week. But it looks like that is a level where it wants to get to. You're at 1244 right now. And if it gets below that level, market says $10.11 on a weekly chart, which you and I are looking for. And that's the number one weighting inside of the GDX. So that would have me stay away from the GDX, potentially. Did you say Newmont Mining was another one?
Newmont was next with 6.5% of the index.
Okay. So in the case of Newmont Mining, just to get a feel for, hey, now here's what Newmont Mining is doing. It has double hammer candles out here, which is a beautiful thing. It's to steal from Tom. We'll steal the beautiful thing piece of it. And that's a November 3rd low, which was 1777. And then the following week, on November the 10th, that low was 1775. You're at 1747 right now, and in both cases, both of those candle sessions, you're down below those levels with volume. And that's never a good thing. You never like to see it close below a hammer candle. It says you're going to go down to the next level. And inside of Newmont Mining, in Newmont Mining, it takes you all the way back into 2000. It takes you back to the to about the $13 level out there. So that's not necessarily good from a GDX. Let's just do the third one. What would be the third weighting inside the GDX?
The next four companies, or five, have approximately 5% or more, and those are Barrick, Franco-Nevada, Rheingold, and...
Okay, so let's look at Franco-Nevada, because we looked at Barrick, and there was nothing good about that. Let's hopefully there's something good. Oh, I've got a really bad tick there.
Yeah, me too. I see that. It's all the way down to really bad.
Okay. Well, we can't do anything with Franco-Nevada. I don't know where the correct tick is. I'll have to write it down and go figure that one out. Because
they typed in $4 instead of $40 on their trade and got taken to the cleaners.
Yeah, exactly. What's one of the other ones other than because we looked at Barrick? So what other one other than Franco-Nevada?
We've got Rheingold and Newcrest are the next two.
Rheingold. So let's look at Rheingold. That's a good one. So I'm glad that you mentioned that. So let's go take a look and see what Rheingold is doing here. So not knowing what Franco-Nevada's tick was, folks, we really can't report on that. But here in the case of Rheingold, if there's any promise, it's going to be Rheingold. It's going to come from Rheingold Resources, because the low here marked $58 even Steven. You're trading at 58.10. And from a weekly perspective, it was the week that began October 27, 2014. That had 6.6 million shares, and you've done 4.9. So here's what I would say: you've hit gold here. If we get a hammer candle and a G, and you decide to go ahead and take a play the falling knife in gold here, I would say, as opposed to the GDX, I'd go with Rheingold, because at least you've got some type of rejection of a swing point out here. Now, that's assuming that it closes about $58 today. If it doesn't, then even Rheingold hasn't give you any kind of a signal. I think you've got to go. My suggestion would be, from what you and I've just looked at, either play gold itself because of that pattern versus the miners. Not that the miners won't follow along, but trying to figure out which mine, or go through each of the mining equities. And try to find the ones that have held up the best, and make your own little basket as opposed to the GDX basket. At least that. Go ahead.
After talking to you, I think what I would do is I'd probably play the GLD with maybe a call. So I'm going to play that, and then I think if I'm going to do oil, and I'm going to stay away from the XLE, but I might look at the USO, because it's testing a swing point from March 18th, 54 million shares versus 15 million.
What I would do there, though, just like my conversation that Garo and I were talking, is go inside the ETF and see what contracts they're holding. Like the VIX contract, most people think they're trading, or the UVXY, most people think they're trading the actual cash VIX, and nothing could be further from the truth. They're not. They're trading the next two, the current futures contracts out there, and I don't know what SEO and USO are actually trading, what that's made up of, because if it's off of the August contract for light sweet crude, that is suggesting that it probably wants a little bit lower price. So But just something to consider. Really, just something to consider out there. Are you in the Tiger's Den during the day or afternoon?
No, I don't do that.
Okay. Because I was going to say, here's what I think would be the most interesting thing. And that is one of the other tools that I like to use is the commitment of traders data. The CFTC releases that information every Friday, holidays with some holiday exceptions. But this week it'll certainly be Friday at 3:30 p.m. So at about 3:35 or so, because I track this, assuming I'm near my computer system, what I will be doing is take a look to see what the commercial traders, that's really the presumed big money, smart money out there, and it is, what they've done since Tuesday's close, because we had that so-called sell-off and flash crash. Well, I don't know what we want to refer to. It certainly wasn't a washout at this stage with regard, because we've gotten below those lows from Sunday night inside gold. That, though, will tell us, have the commercial traders, which have been ramping up in a very fast and large way to take less net short positions in gold. And what I want to find out is, have they ramped it up even further? Because if they have, then you at least have something at your back on the gold trade. I was going to post that I still will post that in the den since I've mentioned that for folks out here. I want to see what the commercial traders have done, just to maybe give us an additional clue out here. All right?
Okay. Thank you.
Hey, you bet. And thanks for calling, and have a great weekend out there. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How you doing today?
Hey, Steve-O, that conversation you just I found real helpful. So thanks for you and your calling going over that. Steve, I would like to talk to you, however, or ask you to review what you see, please, on TLT. That be the ETF that tracks the 20-year U.S. Treasury security. And, Steve, I'll just make an observation.
Yes.
When TLT, and I'm looking at the weekly chart, well, weekly and daily, back in June when the TLT made its low at near 115, of interest, that was almost exactly a test of a Fibonacci 618 support mark.
Okay.
So the fact that the market went to that and has started to bounce here, it's just a lovely thing that a market will trade the numbers so nicely. Now it has rallied, however. We're up to 121.5. And, of course, with stocks seemingly reversing here, one wouldn't be terribly shocked if long bond interest rates continue to fall, bonds rise, TLT rise. But the TLT here at 121.50 has a pattern that looks like an ABCD up. We've come smack dab into the 200-day exponential moving average right here. And then just slightly higher at 123 is the swing low in the TLT that was from, I think, like March 10th or March 5th. And I'm wondering, is there any reason that you can see that this would actually be a short in here? So that's my question for you. Absolutely.
So to answer that question, with regard to the TLT, what I did was I was able to, and thanks for giving all that information. That was terrific and a great summary. And to answer your question about the TLT, I've gone to my continuous contract for the 30-year T-bond futures. Hey, John, can you hold on through this break here?
I certainly can.
Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 136, S&P's down 18. We're going back out to Philadelphia to speak with John about the TLT, the 30-year Treasury, amongst other things. And the question was, is there anything that I can see on my charts here that would suggest maybe a short inside of the TLT? So let's go take a look at what we do know. One thing inside my continuous contract here for the 30-year Treasury is that when the stochastic on this gets up around the 92 level, oftentimes if there's anything where there tends to be a timeout or a top that gets put in as I go across my screen here, mostly a timeout, but sometimes a bit of a top, it's when that stochastic gets up to that level. I don't know why. What I typically use this for instead of that is I look for some type of divergent pattern. Those divergent patterns, which we do not have now, are the ones that really help to identify tops and bottoms. But it also, when price gets up to this level, it starts to get into some stall territory. So that would be one thing that I would take a look at. If I just come over to the current contract, John, you know, today is a test of its TAS market profile high, which is 154 and 223, 154.23 out here. You're just slightly above it. If it gets above that, says 155, and a quarter is probably what gets tested before it runs into some resistance out there. If it fails at the daily box, that would be something to consider. And if we just go straight back out to the TLT, it's trading right around, on a weekly basis, it's trading right around its point of control, right? So this is kind of at 120.88. This is kind of its comfort zone. It's slightly above that, obviously, at 120.150. But it's in that area here where price is most comfortable with, and it's not a real true breakout, let's say. Sure. But if it does break out, there's no reason for it to not run to 125 out there. But those are the things that I just quickly was visually able to look at. Is there something that I missed that you might see too, or?
Yeah, no, not at all. The reason I'm asking, Steve, I have struggled myself with this particular market for over a year. Struggled to find anything where I had high conviction.
Yeah.
To get into a trade and hold on to it. So you're talking
the best tool that I have that seems to work really well. And I can't tell you why. It just does. It's most consistent. It's just simply apply the stochastic oscillator to it, 1433 as the settings, and look for where the price of the bond is basically flat, and you've got higher lows in the stochastic, or in this case here, you'd be looking for price to make higher highs with the which it hasn't done without a confirming stochastic. But that pattern seems to at least work out. That's the best most consistent pattern that I've been able to find out there.
I looked at the history that you notated there. Thanks for sharing that. Perhaps that might come into play in the next couple of weeks. So thanks very much. Appreciate it.
Yeah, no problem. Apply that to go back to all the old historical charts, and that's where you'll get your best signals from. So thanks for calling. Have a great weekend. That was John. And folks, my apologies, but we're out of time here. So stay tuned. Our man David White is up next. The Tom O'Brien Show from 3 to 5. Have a terrific weekend, and I'll look forward to seeing you Monday afternoon. Have a great weekend. Thanks, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.